community on aspects of energy and water conservation and efficiency. Today's topic is particularly relevant as we are dealing with the aspects of financing of such measures. As a business community, we seem to be geared to automatically gravitate towards grants, attracted by the non-repayable element. But as we seem to underestimate the advantages of seeking finance through financial instruments that are offered by entities that work, breed, and think like the private sector. Indeed, financial instruments require less bureaucracy and administrative paperwork and allow companies greater freedom in financing their activities. However, on this, we will definitely hear more from our speakers today, and I look forward to that.
Thank you very much.
Before closing off my intervention, I would just like to add, I'd just like to make sure we're all aware of that, of the additional support mechanism that is being offered by the Malta Chamber. As part of our efforts through the Enterprise Europe network, we can provide at no cost the services of a sustainability advice. We're okay? Name now is Can we hear? Okay.
Yes, we can hear fine, no problem.
Okay, so basically the sustainability advisor who can visit your companies and provide you with practical advice on how to improve your energy efficiency, which advice can then form the basis of any interventions which can be covered by the green loans, which we will obviously be speaking about today. Should you be interested in this first step, please do not hesitate to contact us in order to facilitate any needs. So with this, I leave you to the webinar, and I wish you all a very fruitful discussion. Thank you.
Thank you, Chris, and thank you for making everyone aware of this service from the EEN network. Anyone who reaches out to me about it, I'll be sure to pass them on as well.
Pleasure. Excellent. Thank you.
Thank you, Chris. With that, we'll move over to Mark Scicluna Bartoli, who will be giving us a presentation on BOV's green financial product. Over to you, Mark.
Can you see the presentation?
We can.
Okay. Thank you very much. Thanks, Tim. Thanks, Mr. Cesario, for the introductory note. What I'll give is a small insight into the BOV energy loans. The BOV energy loans are a product which we developed together with the European Investment Fund, and it's a bit of a European pilot in itself as well, for the simple reason that where previously as Bank of Valletta we used to champion financial instruments which used to provide the guarantee. What this product does is it blends not only a guarantee, but it also provides a full interest rate subsidy and also technical assistance, similar on the lines Mr. Cesario mentioned, where companies and even banks are being assisted to ensure that companies develop the right kind of investment projects to finance a transition to a greener, more climate neutral environment. As BOV, we structured the portfolio into 3 products. One product is targeting the personal customer, the other product is targeting the homeowner, and the other product is targeting the business community. I'll just give a brief overview of the 3 products, and then we'll deep dive a bit more into the business energy one to give you some example of how it works. The personal energy loan is sort of a fast to market product, which means that you could benefit from a maximum loan of 50,000. There's no collateral, no customer contribution, no processing fees required, and you can benefit from an interest-free loan for the first 10 years. That doesn't mean that should you wish to extend the term over a longer repayment period, which can go up to 15 years, then there would be a variable interest rate of 2.5% per annum for year 11 to 15. Yeah, so then that is your prerogative. The home loan is a little bit different. The home loan is for larger amounts, going up to 100,000. It also is similar interest-free loan for the first 10 years. However, it could be repaid over a much longer term, which in line with the home loan repayment. The amount of interest payable on that remaining term would be 2.15% for that amount. In the home energy loan, obviously, there are some additional requirements, which would be, there would be a customer contribution. There would be the home loan, which would be required as collateral. However, would remove the processing fees and then repayment fees. So that's the home energy loan. And then there's the business energy loan. The business energy loan, the term we have limited it to 10 years because when we see most of the assets would depreciate over a 10-year time frame. So it is an interest-free loan with a lower amount of extendable security, no processing and renewable fees, and the customer contribution is in the region of 20%. Later on, at the end of the presentation, I'll give you a case example just to feel a little bit how the product works. Maximum loan amount, what we've done is we've opened up the product to a number of entities, meaning not just SMEs, which was normally the kind of enterprise that would benefit from risk-sharing instruments, but we've extended it to mid-caps, we've extended it to large enterprises, we've extended it to non-state aid entities. These could be NGOs, regulated bodies, so the catchment is quite wide. And obviously the maximum loan amount depends on state aid issues, very simple. The de minimis aid is what caps the maximum loan amount. If you have a term loan of around 5 to 6 years, your maximum loan amount would be 750,000, consuming your full de minimis. That's a point I'd like to make. As well, a feature of these products is that the drawdown needs to happen by the end of this year. So if you're thinking of specific case studies or pilot projects you want to implement, they would need to be those kind of projects that could be implemented quite quickly over a short period of time. As I said, these are the list of entities that are eligible. As I mentioned earlier, obviously a question you have are what are the eligible costs? There are a number of eligible costs, quite targeted eligible costs. In essence, your underlying principle is, am I saving energy with this investment? That is the underlying principle, yeah? So you're going to have insulation, you're going to have ventilation systems, you're going to have shading, you're going to have energy management systems. I know a number of you potentially are in the manufacturing space, so you could have the retrofitting of certain machinery or machine processes that could save you a significant amount of energy. You have PV panels, but with a proviso, unfortunately, that it's only for your own use. If you are benefiting from a feed-in tariff, at this point in time, they would not be eligible costs. That is the chunk of the type of costs we're looking at. What we've also changed in the product, besides widening eligibility, is we've also ensured that you can benefit on the same investment cost, both from a grant and a loan. And just to give you an example of this, I just wanted to give you a simple case study of two kinds of investment costs, one that benefits from a grant and one that doesn't, and how you could compute it from a financing point of view. I'm using electric vehicles because in this case, Transport Malta has removed its grant element on the hybrids, so I can use it as a good case example. Yeah, and I used exactly the same costs so that you can compare. So what are we saying here? What we're saying is that if you were to buy 5 electric vehicles, which would cost you 200,000, yeah, and 55,000 would be a Transport Malta grant, yeah, you could, if you wish, bridge the cash flow of the Transport Malta grant if you don't have it through a commercial loan. But otherwise, you could benefit from a BOV energy loan of 105,000 and a contribution of 40,000 on the electric vehicles. And that way you can blend the grant and the loan on the same investment cost. This was something that wasn't allowable under EU rules. Thankfully now we're having an increased flexibility to be able to do that. In the hybrid space, it's still much more simple. So basically you've got an investment cost, you have a contribution of 40,000, and then the BOV energy loan of 160,000 would be your total cost on the hybrid element. From my end, I'll stop here so that I can give space to my other colleagues to present their products. but I'm open to questions. Since I've just finished my presentation, they may be fresh in your mind. I'm open to any questions you may have.
Thank you very much, Mark. Anyone who has any questions, feel free to put up your hand. In the meanwhile, I'd like to ask Mark for a bit more information, perhaps about the source of the financing and the timelines attached to it. So, as we've previously discussed, the companies have until the end of the year to apply for this product, correct?
Correct. We're exploring the option of trying to extend it by another 6 months. However, it's difficult because the EU funding rules stipulate that it's by December of this year that you need to draw down the funds.
That's it. So to clarify, this is to apply, but not necessarily for the project to be finished, of course. Is that correct?
No, the project would need to be finished in truth because you would have to issue your invoice by December and pay it.
Okay, all right. So, all right. So let's think, what are the kind of timelines we can expect for, let's say, feasible projects this year? So let's say some companies attending this call are interested. How would you advise them to act in a timely manner in terms of BOV's infrastructure procedures?
The best way, what we're doing at the moment is we're having a number of meetings with customers, or I meet them myself, and we could see ways of how to structure a project that could be implemented within the required time frame. You need to design the product in such a way, the investment cost in such a way that allows you to implement it by the end of the year.
Yes.
So we're having a number of meetings with customers, prioritizing projects, prioritizing potential investment costs, and then they can proceed accordingly.
Very good. So 2 more questions from my end. How would these favorable conditions intersect with state aid rules?
The state aid rules, it's pretty simple. It is a de minimis amount. So, as I said in my example, if you're benefiting from a 750,000 euro loan over 5 years, that would consume all your de minimis for 3 years. So it's your de minimis bucket that is dependent upon that. If you have consumed an element of your de minimis already, then the size of the loan would naturally decrease.
Thanks, Mark. Final question from my end. What's the future looking like moving forward? Do you think this will be replicated in a similar enough way that anyone who has a larger project and may think they're not going to make this deadline might be able to plan long-term with BOV, perhaps?
As I said, this is a pilot and there are some lessons learned.
Yes.
One of the lessons is that potentially maybe under state aid, it could be under GBER, which would do exactly what you're saying, Tim, which would allow potentially for larger amounts. Timing-wise, what I'm seeing is we're in a bit of a lag time because EU funding rules would be coming to an end towards this year, and I'm not seeing succession projects at the moment out to be able to ensure continuity. So in 2024, there might be a small lag with new potential products coming out exactly like this one in 2025.
Okay, so that
but
depends.
Obviously, it depends on the EU
Yes.
machinery.
The discussions which are ongoing and what they decide on.
Exactly.
Okay.
Exactly.
Okay, thank you. I think that provides quite a clear overview. Fantastic. Thank you very much.
Thank you.
So I am now going to hand over to Eugenio De Urso for him to introduce himself, and I'm going to be sharing the presentation for him. Eugenio.
Thank you. Can you hear me?
Yes, loud and clear.
Hi. Thank you, Timothy. Thank you, Malta Business Bureau and the Malta Chamber for inviting HSBC to this event, and thank you to everyone for attending today. My name is Eugenio D'Urso. I am the Senior Business Development Manager at HSBC for corporate banking in Malta. If that is okay, I would like to start with the third slide, if we can go there, which gives you a brief summary of HSBC commitment to the environmental cause worldwide. As you can read in this slide, and maybe if we can move to the next one as well, HSBC is focused on helping to deliver a net zero global economy. It's a pillar of our strategy. As a business, we aim to achieve net zero in operations and supply chain by 2030, and in our financing portfolio by 2050. Between now and then, we are working with our clients to help them reduce their emissions and scale up low carbon solutions as we work to reduce our own. This will be a change over time as businesses and economies progressively move away from high carbon activities. We call this the transition to net zero. We can have the biggest impact by working with our clients to help them achieve it. If we can now move to the following slide, please. HSBC provides a number of products that aim to sustain investment in the green and sustainable space. Here you can see the link to the actual offering, and I'm happy to share to everyone the slides after the meeting if you want to contact me by email. And if we can move to the next slide, we can see the actual 4 products that we currently offer in Malta. So we have green loans, green trade finance, sustainability linked loans, and sustainable trade instruments. If we can move one slide forward, there is not sufficient time today to go through our entire offering, but I would like to briefly discuss and focus on our sustainability linked loans. Sustainability linked loans, as you can read, are similar to normal corporate loans, but should follow the sustainability linked loan principles, which are the principles recommended by the loan market associations. Sustainability linked loans can take the form of any type of loan instrument and contingent facility, which incentivize the borrowers to achieve ambitious sustainability performance targets. Sustainability linked loans are offered at competitive rates to our account holders. And if we can please move to the next slide, I would like to, thank you. I would like just to briefly focus on what are the advantages of sustainability linked loans, what is the key benefits. Number one, simplicity. They have a very vanilla structure, which is similar to a normal loan. On the other hand, we have flexibility. We can offer tailored solution in terms of structure, tenure, and all the components. In terms of pricing, I would like to highlight that sustainability linked lending can result in a pricing benefit for the customer if they meet the KPIs that has been predetermined. And if we can move to the following slide, please. Go back one for the moment. Apologies. Just wanted to add one other thing on sustainability. Borrowers, in terms of how the sustainability linked loans work, borrowers should communicate to the lenders its sustainability projects and objectives. We will then agree some sustainability performance targets that has to be ambitious and meaningful and tied to a sustainability improvement in relation to a predetermined performance target benchmark. Borrowers should maintain and make readily available up-to-date information relating to the sustainable performance target. And finally, borrowers should report on sustainability performance target at the end of each year. Although, if we can move now to the following slide, please. Although I appreciate we would not have time to discuss these other instruments, which you see the slides now in detail in this forum, I have also added here to the presentation a couple of slides related to green loans, which you can see in this slide. And if we can move one slide forward, please. where here you can see the benefits. I'm not going in detail here to give everyone time, but if you can move one slide forward. Yeah, thank you. I've also added a couple of slides on sustainable trade instruments. If you're interested to receive a copy of this presentation, as I said, to read in more detail and perhaps to discuss your offering, I will share at the end of the presentation my contact details, and you can contact me directly. These other products are also very interesting and can offer a wide range of solutions in the sustainable space. Finally, together, if we can move one slide further, please. Thank you. Finally, together for very competitive rates and our ability to tailor our solutions to your needs and requirements, being our sustainable and green offering more flexible than traditional loans and trade instruments, I wish to highlight our HSBC capabilities in terms of our various research material. If we can move one slide forward. Thank you. That we also offer to our clients. Have provided in this slide here some of our dedicated pages in the green and the ESG space, and more generally, we are able to offer live market research related to specific sectors and industries, prepared by our international network of economists and markets analysts. As you know, market research is very valuable instrument for you to guide your strategy decisions, and we know our clients find this extremely useful and helpful when planning on the green and sustainable space and projects. If we can move to the following slide, please. I just want to say you have my contact details there, but our relationship managers are delighted to discuss with you in relation of your specific needs and tailor specific solutions for each individual project that you have in the green and sustainable space. For HSBC existing customers, you can obviously contact directly your relationship manager. For businesses that are not yet with HSBC, you have my details there. I'm available to discuss with you directly. My email address is eugenio.durso@hsbc.com, and you have my phone number there, 238-08669. Finally, I just want to thank you for your attention once again, MBB and the Malta Chamber for having us here. Please feel free to follow up to me by email or phone if you have any questions in respect to our products and initiative, and we would be delighted to assist. Thank you very much.
Thank you very much, Eugenio.
Thank you.
It's been a pleasure. Now we'll move over to our final presentation, APS, where Miguel Calleja is going to give us an overview of the financial product, which is receiving funding from the same source as the BOV product. Over to you, Miguel.
Thank you. Thank you, Timothy, for organizing today's event and for inviting us to participate. I'm just sharing my screen, which should be visible very shortly.
Yes.
And I'll run you through a presentation. To start with, I'm Miguel Calleja. I'm involved in product strategy at APS Bank, and I'm responsible primarily for our suite of ESG products and our commercial and corporate banking products. To talk to you about the APS Green Finance product, which we developed in participation and in partnership with the EIF, similar to the previous product that we saw from BOV. It carries many of the same benefits. So a few of the key features that are most interesting to our clients are that it carries a variable interest rate of 2.5% for the first 10 years. Thereafter followed by 2.05. That's mostly for personal customers and not for commercial entities. However, the interest rate is actually fully subsidized for the full 10-year term through a interest rate subsidy mechanism through local and EU funding. And that covers it to 5.15%. So there's a good buffer as well in terms of the interest rate subsidy to cater for any eventual rate rises that may happen across the Maltese Islands, as we're seeing at the moment as well. We finance between 80 and 100% And the loan is available for a maximum term of 15 years. However, for commercial entities, the maximum is 10 years, which aligns to the coverage of the interest rate subsidy. Thanks to the 80% guarantee that is available through the European Investment Fund, we're actually able to significantly reduce our security requirements. And we're also able to waive or significantly reduce a number of fees for both commercial and also personal customers. I'm going to touch upon very briefly what kinds of products can be supported through this loan. Very similar to what we've already ran through in Mark's presentation. So anything that's related to energy efficiency or sustainable measures that would improve the energy performance of the operations of the building, whatever the ultimate use of the proceeds would be for. So a number of things, as you can see: electric vehicles, things relating to the building envelope, and measures that may be installed within buildings. You have spatial heating, solar systems, insulation, roof gardens, and so on. We'll get into an example on this a bit later. One point I would like to reference, especially related to commercial entities, is that renewable energy, specifically PV systems, photovoltaic systems, do have a restriction, because if they are benefiting from the feed-in tariff that's available locally, where a subsidized rate is usually granted in terms of energy generation that can be sold back to the grid, that would actually constitute double subsidy. We mentioned earlier that the benefits that are possible through this instrument and through this product are reportable under de minimis state aid regulations. Therefore, the regulations state that there would not be the possibility for having double subsidies and double funding with other grants that may be applicable. So the feed-in tariff is one, and also local government grants that are related to the purchase of PV systems are another. So in order for a PV system to be eligible to be financed through this product, we have two options. The first would be to opt out of the feed-in tariff entirely and have it connected to the company's own operations. Or the second would be to have a feed-in tariff at a standard market rate rather than a subsidized rate, and also to ensure that the total energy being generated by this new PV system is equal to or less than the total energy consumed by commercial operations of the group. So essentially, you're having a standard market rate applied, even though you're connected to the grid, and the energy that you're producing through this system is equal to or less than what the energy you're consuming in your day-to-day operations, annualized, of course. So those are the two options available for PV financing. What I'm going to go into now is a small case study example, just to showcase this product and our other commercial products that may be useful to finance a larger project. So here in this example, I put together a very basic manufacturing case study. So we're looking at a company who's looking to buy and set up a new premises, a new facility to manufacture goods. And we have an option to utilize a product mix that would incorporate a standard commercial loan, the APS Green Finance loan, which is the loan we've discussed today, and our eco loan, our commercial eco loan, which is our in-house commercial offering for green and sustainable financing. So just running you through the example very briefly, things such as the purchase of the site itself, the land, and standard building materials that do not in any way lend towards energy efficiency would be fully financeable through a standard commercial lending product, applying also a 20% front finance contribution from the client. However, items that are in scope for financing under the APS Green Finance product through the EIF eligibility criteria, such as insulation materials relating to walls, ceilings, floors, external membranes as well, and waterproofing. All of that would be eligible, and I've included it in the column under APS Green Finance. Now you'll notice that 750K is the only amount in that column, and that ties in with the de minimis entitlements, where a company is entitled over any 3-year period, the last 3-year period, to up to 200K worth of subsidies and benefits, essentially. And we have worked it out that a company with a full entitlement, having not yet made use of any de minimis funding would be entitled to a loan under green finance of 750,000 roughly over a 10-year period. So that is essentially the full entitlement. Now, what we've also done is factored in all the other costs that are related to energy efficiency or sustainability into our in-house eco loan, which is competitively priced. It carries benefits that are far in excess of what may be available under a more standard and conventional commercial lending product. And therefore, even when it comes to machinery, for example, and finishings, whether they're double glazed apertures, whether the machinery itself is more energy efficient than previous machinery or older machinery that may have been used in the same manufacturing process. All of that may be considered under our standard eco loan. They would also have been considered under the green finance loan, but because of de minimis, as I've said, once we've reached our 750K allocation, we can then see to everything else that is sustainable and energy efficient under our in-house proposition. Other than that, the other run-of-the-mill costs relating to transportation of goods, labor costs, etc., will still be seen to under a commercial lending facility, or in this case, I have put them under the column of front finance contribution from the client. So overall, what I think is interesting is to see the mix of benefits and special rates perhaps that could be right to incentivize clients to actually invest in energy efficient solutions. There's a really good amount of value in the market today, especially through working with institutions such as the European Investment Fund, obviously, and being able to access. And it's definitely in the interest of all business to evaluate what is available and how it may help them. Before I conclude, I just want to mention, as we mentioned there, this specific product, because it makes use and it to be the best, so really on the or stage so long. I'd also like to highlight slowly through our participation instrument do access resources from PwC in Malta who would provide technical assistance, including assistance project planning, budgeting, and cost allocation to any of our customers who are interested in the green finance product. So that is a service that they are offering, and we have available to us throughout the assessment. So I would encourage any businesses, whatever stage of planning you're in at the moment, even it's the initial concept stages, to get in touch with your bank choice. In our case, it's APS Bank because we're participating in this green instrument. And we can actually connect you to technical assistance, both locally through PwC and also internationally with the European Investment Bank, European Investment Fund. So that's just a level of benefit to perhaps help you with your planning. If you're already an APS customer, of course, you may get in touch with us through any of our branches, dedicated team of RMs. If you have any other questions or you're interested in learning more, you'll also have my details on this slide, which I'm sure Timothy will be sharing with you afterwards. So please do feel free to get in touch if you'd like to discuss anything further. Thank you, Timothy. Over to you.
Thank you, Miguel. Your audio was a bit choppy at one point, so I'll try and ask a couple of questions just to clarify anything that I think we may have missed. But first of all, thank you very much for going into detail regarding the solar panels. That is a question that we receive quite often regarding the double funding. And in fact, I wasn't even aware that there is a third option, which is that you can pay the market rate with your solar panels and not only use them for your own consumption to make yourself eligible for green products. I wanted to ask a clarification regarding the eco loan. Is that subject to the same financial instrument running out at the end of this year?
Thank you. That's a good question. So our eco loan is an in-house proposition. It doesn't participate in any European instrument, and we're not restricted in any way by any kind of expiration date or deadline for the funding. So that's something we've developed in-house. We have determined to give it a very beneficial in-house. It doesn't, of course, carry the extra benefits such as an 80% guarantee or an interest rate subsidy, but it does have the benefit that it's not time bound. So it's not linked to instrument, something we can continue to offer into the future as well.
Thanks, Miguel. And you said that there can be some mixing and matching according to customers' needs. Can you elaborate on that?
Of course. So essentially, whenever we evaluate a commercial proposal, whether it's small or even larger scale, we try to determine what the best mix of products would be for our customer at the end of the day. So it goes with perhaps even based on today's discussions that the APS Green Finance or the EIF instrument in general offers the best incentives, given there's a full interest subsidy and reduce collateral requirements. So I would say that that would, without saying as being the ideal solution, so we would automatically see what is eligible and what the customer's entitlement is in terms of de minimis to allow them to make use of that product. After that, then we move on to the next stages. So what solutions could be packaged into and eligible for an eco loan, much the same way as a green finance, energy efficiency and sustainability, and what would need to be factored into a more traditional commercial lending. So I'd say this kind of stock take at the beginning of any commercial valuation. So on that side, yes, we do think of product mix. On the retail side, for personal customers, which this instrument is also available to, it wouldn't usually be the case. We'd usually go for, you know, a straight through, simpler one product per solution, essentially.
Fantastic, Miguel. I don't think we have any immediate questions from the floor, but I have received multiple requests for the slides so that people can no doubt go through them at their own pace, look at the figures and the numbers, and most likely reach out to the various banks with follow-up questions. So thank you very much, Miguel. It was very interesting to see the different options and possibilities with APS. I like your mixing and matching. So I invite everyone in attendance today to keep your eyes open for the slides, which I'll be sending. And obviously, I invite you to reach out to the different banks present today so you can have follow-up discussions and see what works for you. Keeping in mind, obviously, that when it comes to the financial instrument, which runs out at the end of this year, you may want to get on it immediately to make best time of it. For smaller projects you might have, and then of course, as has also been discussed today, looking to the future, at the end of this year, discussions at EU level will be finalized and hopefully new possibilities will be rolled out, or as Mark as well said, BOV, perhaps even an extension for the current financial product. So we'll see. Thank you, and any further questions, please feel free to email me, and I'll also facilitate communication for you to get in touch with the banks. Thank you, everyone. That brings us to a close for today. This was the 8th event of the WeMake project, which will conclude in July. We'll be having another one in next month in April, focused on academia and industry collaboration. Wishing you a best day for everyone. Thank you.
Thank you.
Thank you, everyone.
Thank you very much, everyone.
Have a good day.
Thank you. Bye-bye. Have a good day.
Thank you.